Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at KOL, KOL, the Vectors KOL ETF. And this is a video where I'm going to highlight a losing trade because nothing is more of a pet peeve than mine than people that only post their winning trades because that's completely unrealistic. Every trader loses, and it's just about managing those losses and trying to win more than you lose. So for KOL, let's look at the setup and what I was looking at for my bearish entry, and I have exited for a loss at this point. Not a large loss because it was very clear for the resistance. So first off, out of the bat, I was playing bearish, and a lot of times, traders could say, why are you playing bearish? It's a very clear uptrend. Well, I'll explain my reasoning here. I do really like playing oversold bounce plays, which are against the trend, and the opposite of that, the exact opposite, is a really overbought top fishing play is what I call it, and I'll explain how the risk is fairly limited because it's very clear when the trade's not going in your direction. So on the daily time frame, we had a high of 1263 and we consolidated and bounced off the 10-day moving average support. Then we had a double top at 1263 and then we topped out at 1264, saw a lot of profit taking and closed down at the low of the day. I entered a bearish position on KOL on this day, 3 days ago, October 14th, and I was looking for a pullback and a lower low, a loss of the 10-day moving average support. I was looking for the RSI to cool off. And I also liked the fact that the weekly time frame had formed a bearish reversal doji after a huge move 4 weeks in a row to the upside. We had the RSI in the mid-80s on the weekly after that bearish reversal candlestick. We had essentially a double top by a penny, a close at the low. I was really liking the setup, and I was looking for just a short-term trade, maybe a week, depending on how it played out. Another reason that I like this spot as a bearish entry was looking back at previous history and finding resistance. And I'm actually going to look at the weekly so it's a little bit cleaner. But back here, it's when you have a dump or a strong move to the upside and you don't see a lot of consolidation, establishing bases of support and resistance, you just all out fall, it makes it really easy for the bounce to work through those resistance levels. So that's what we've seen here. We saw KOL absolutely dump in 2015, and now it's ripping in 2016 because there isn't a ton of resistance due to how quickly we dropped. But now we're getting to the levels where we do have that previous price resistance. Previous support was 1236, 1236, 1247. We have some resistance levels here in the low 13s. So I was seeing a bearish reversal doji lining up with previous price history where we did start to see some leveling out and some support and resistance levels established after or before the straight dump occurred. And I was looking for that bearish reversal doji to be confirmed. Obviously it wasn't. So my exit was the day that we gapped up. And it was very clear that the bulls were heading to higher highs once we broke 1264. And now at this point, we have a bearish reversal 3-gap up pattern. I'm personally not going to be playing it again. I learned my lesson. Plenty of better setups out there and plenty more liquid ETFs to be playing. JNUG and the miners had a nice day today. But it's a bearish 3-gap up reversal pattern, and if we see a bearish reversal candlestick tomorrow, it will be confirmed. So it's another potential opportunity to look for a short-term pullback. The bull volume has been nice and impressive, increasing here. And again, if we don't see a bearish reversal candlestick tomorrow, then we will not be confirming this 3-gap up pattern. But what this pattern does dictate is that the bulls are tiring themselves to the upside, and certainly easy to see on the RSI and a lot of other indicators that we are pretty extended to the upside. So the question will be whether we reject from this upper Bollinger Band daily resistance and form a bearish reversal candlestick. And if we do pull back, we'll look at these gap fills, 1298, 1283, and we'll see how much momentum the bears do have. But just wanted to point out that trade and a comparison to use it to. I used to play poker a lot, and if you're a poker player, you'll understand this. I'll make this trade every time. I like the setup. I had my reasoning. I had the weekly time frame, agreeing with the daily time frame of that little double top, agreeing with the previous price history. And if you play Texas Hold'em, I would essentially compare that to me having a good hand like kings or something and going in against ace queen and I lose. It just happens sometimes. The odds were significantly in my favor in terms of the setup. Technically speaking, the setup was saying pullback was coming more often than not. It just didn't happen this time. And there's going to be times where things are extremely likely to happen, where they don't happen. And that's why it's always important to have a trade plan in place, have your stop losses in place so you can get out and move on to the next trade. So if I saw this exact same setup again, go back in time, give me this exact same daily, weekly, previous price setup, I would enter bearish again. I would make that trade again. Just like if I had kings, I'd go all in again. Obviously, I wasn't all in on this trade, but I would go all in again with kings because the odds are in my favor. So that's just a little analogy. And now I'm done talking. Thanks for watching. Have a great night.